Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at S&P 500 and crude oil. But for more regular updates on a range of markets, join us at myfinanceteacher.org. Let's start with S&P 500 for now. Looking at the duration of the short-term daily cycle. At the moment, S&P 500 is already on day 40 of the short-term daily cycle. These usually last for about a couple of months. Although in the general stock markets, this duration can fluctuate quite a while. But in either case, it's not a young cycle. And I think there is a good chance that over the next, let's say, few weeks, S&P 500 might actually decline. Possible support zones to test is this low from middle of May. So a decline to 2750 is very likely, in my opinion, over the next few weeks. But in a more shorter term, I think there is also a good chance that S&P 500 continues climbing up a little bit, and it might actually close this gap on S&P 500 that would be closed somewhere at about 3182. So although over the next few days we might see S&P 500 climb a little bit higher, whether a new low will be created or not is still uncertain. But in general, over the next few weeks, I think we're going to see lower prices on S&P 500. Looking at the futures, compared to the close yesterday, the futures price is a little bit lower. So that actually doesn't look so good for S&P 500. And even in the very short term, over the next few days, it still remains to be seen if this gap is going to be closed or if S&P 500 just continues down from here. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Next, let's have a look at a few interesting indicators for S&P 500, starting with the optimism index. That's from Sentiment Trader. Whenever optimism index is above this red line, it's not really a good time to buy. And at the moment, optimism index is not extremely high. General markets are not extremely optimistic, but nobody is too pessimistic at the moment. And as you know, it's a good time to buy the asset when blood is flowing on the streets. There's no blood on the streets right now. I think we're going to wait a little bit with the general stock markets before optimisms slide down a little bit. This is another indicator, that's smart money confidence. It's generally a good idea to follow the smart money, the institutional money, and usually it's a good idea to enter the markets when the confidence of these smart money traders is, well, at least above 0.6. At the moment, this level is at about 0.46. So again, too early to enter the markets. A general decline over the next few weeks is likely, in my opinion. Next, moving on to fear and greed. Again, you want to enter the markets when there is fear, when everybody is afraid, when there is a lot of blood on the streets. And you don't want to enter the market when there is a lot of greed. If you do have a position, you probably want to sell at least part of your position when there is a lot of greed on the markets. And at the moment, well, at the moment the markets are in neutral territory. Looks like the markets have been in neutral territory for about a month already. So about a month ago, fear and greed index, that's from CNN, was at 50. It's at the moment at 52. Looking at this fear and greed index over time, it's usually a good time to enter the markets when this index is at least close to 20. For example, in 2019, we see three bottoms on this fear and greed index. As far as I understand, these are probably the lows in S&P somewhere around May, August, and October. If we go back to S&P, zoom out a little bit, I think there were some lows in S&P in May, August, and October of 2019. That kind of aligns a little bit with these lows in fear and greed index. So in general, I'm still out of my positions relating to the general stock market, relating to SPY. I have been updating the members at myfinanceteacher.org about my SPY positions. We've had a nice profitable trade over the last few months. But at the moment, I'm still waiting for a nice entry opportunity. And if you want to be updated on such opportunity, join us at myfinanceteacher.org. For now, let's move on to crude oil. Well, crude oil over the next few days as well, I think has a chance to go a little bit higher and maybe poke once or twice or thrice through the upper range of the Bollinger Bands. Usually the markets stop with a couple of pokes above the upper range of the Bollinger Bands. And if RSI inches a little bit higher, if it touches or dips a little bit into oversold territory, that would be kind of nice for a more identifiable top in crude oil price. But in general, though, over a slightly longer term of, let's say, several weeks, I think crude oil is going to slide down a little bit. We've seen a dramatic increase over the last, couple of months. That's over the last 65 days. I think we need to see some cool-off period in crude oil, at least down to the lower range of the Bollinger Bands. Maybe down to these May lows, that's somewhere at about $31, and possibly down to these early to mid-October highs, that's somewhere at about $29. So a cool off to $30, as I mentioned in one of my previous videos, is likely over the next few weeks on crude oil, maybe after some inching higher over the next few days. That's what the chart tells me. And looking at a number of indices as well, this is optimism index on crude oil, we see that the markets are not terribly excited about crude oil. So again, there is still some potential for the markets to get a little bit more excited as price moves a little bit higher. But an explosion higher, I don't think it's very likely. Usually when the excitement comes close to this red line, that's when crude oil is close to some sort of a top. And looking at seasonality of oil prices, we see that June is not too bad of a month for crude oil usually. June is nearly finished, so we might see some nice positive gains for June, but July is usually not as good for crude oil as June. So that kind of agrees that maybe over the next few weeks crude oil cools down a little bit, possibly even giving us a negative return for July, as the average return for July over a couple of decades recently was pretty close to zero. So that's a general stock market and crude oil, and I've just remembered something I forgot to mention on the general stock markets. So looking at a slightly longer intermediate term rather than what's going to happen to this shorter term daily cycle in S&P 500. Well, over the next few weeks, I think S&P 500 is likely to decline into the end of this shorter term daily cycle, which usually lasts for about a couple of months. So maybe into mid to end of July, we'll probably see lower S&P 500 numbers. After that, we might see some bounce into the next short-term daily cycle, which might actually give us a more significant low as we go into the intermediate cycle low, as we go into the end of summer, the beginning of autumn, and that decline into the intermediate cycle low on S&P 500 might actually also coincide with some healthcare concerns. If there are some increases in the number of cases of healthcare issues, that might give us some downward momentum into the intermediate cycle low. Usually these intermediate cycles in the general stock market last for about half a year. Although the average duration of about a half a year or so doesn't give us a perfect prediction of the next intermediate cycle low. But in either case, autumn seems very likely at the moment. So stay healthy. Let me know what you think. Leave your opinion in the comments below. I wish you a very nice day. I also wish you hit that like button, subscribe to the channel if you haven't. Join us at myfinanceteacher.org and good luck in your trades.